about that. So, recapping what I just said, inflation came in at 0.3 versus 0.5 expected, so that's a good month-over-month reading. Yearly, year-over-year came in at 5 versus 5 expected, so not really much change there, but that is down from 5.2% last month. So I do think that the markets are going to be bullish based on this inflation data that just came out today. I think it's going to be tempered, though, by the jobless claims coming in at 225 versus 235 expected. So that means that there's less people that are unemployed, basically. And this is down from 241,000. And there's also, the sentiment that Fed Chair Powell came out and kind of created yesterday, to where he even kind of convinced me to maybe start dollar cost averaging into stocks. I've sold out of pretty much all of my stocks besides 30 shares of Tesla and 100 shares of Fulgent Genetics, a genetic testing company. But before that, I had like $60,000 in stocks. Now I only have maybe like $20,000 in stocks. So I sold out of a majority of my stocks. Now, after hearing what Fed Chair Powell spoke, I do kind of feel like it might be a decent time to start slowly dollar cost averaging. I'm not going to go ham. I do have around like $40,000 of cash. So I might maybe start buying like $400 a week, like 1% of my buying power. I will say that there is a caveat to that. And that caveat is that the Fed is going to keep interest rates higher for longer. And this is something that Fed Chair Powell talked about in the last Fed meeting, to where he said they're not only looking at the pace of interest rate hikes, and he did say that there's likely going to be a 50 basis point rate hike for December, but they're also looking at the height that interest rates are going to, and then they're looking at the length that they're going to keep the the interest rates high. Something very important that y'all should check out is the Summary of Economic Projections, also known as the SEP. And you can find that, I think, on the Fed calendar. Let me see if I can find the right website for it. Fed meeting calendar or something. Okay, I think this is where you'll find it. And I'll link this for y'all, and y'all can read through it with me. But basically, this is the projection material. So this is the SEP, where the Fed expects interest rates to be going. Thank you, Carlos. Prayers from India. Got people from all over the world. Glad to see y'all here. Anyway, so this is the Summary of Economic Projections in numbers, okay? So the most important thing that I took away from this in September was the longer run. They're expecting interest rates to stay between 2.3 and 3% in the longer run, so 6 years or more, right? The last time that we had something like this, a SEP similar to this, was back in 2018. And then the Fed, had to start lowering interest rates as kind of a recession started to come about in 2018. So they started lowering interest rates, and then they cut the interest rates to zero in March of 2020 because of the thing, right? So basically they were trying to save the monetary system because they thought it was going to be the end of the world. Turns out that we're okay. But basically we've had 0% interest rates for the better part of the last 10 years, and now we're not going to have that anymore. Okay, we're going to be between 2.3 and 3%. And the last time that we had interest rates above this level for that long, you would go back to 2004 to 2008. We know what happened after 2008. And then before that was, I think, 1994, which is the year before I was born. So I don't really know too much history about that, but let's pull up the Fed funds rate history, okay? So I'll show you this in a graph. Nice, beautiful graph for y'all. So we started raising interest rates between 2016, 2018 to 2.4%, and then we dropped them when COVID hit. In 2004, we had them at 1%. We didn't get them above 2% until January 2025. We held them there and went up to 5% in 2007. And then you had the great financial crisis. Okay. Are we looking at FOMC numbers? Just got here. Yeah. So I'm looking at the Fed summary of economic projections. So basically where they expect interest rates to be in the long term, and we haven't had interest rates this high for this long, right? And the last time we had them above 2% for more than 4 years was back in 1994, when they were 3% to 6% in 2000, and then we had, the dot-com bubble. So very interesting data whenever it comes to what's going on with the monetary system. Now, that is my caveat to buying heavily into stocks and why I'm hesitant to, start heavily dollar cost averaging. So I'm only going to be doing like 1% of my cash per week. So that means I have 100 weeks that I could be dollar cost averaging if my cash pile just stays the same. Obviously, we're making money out here and building the cash pile. So hopefully we can build the cash pile faster than we're spending it in the stock market. But anyway, on to some trades that I made yesterday. Doing really well today. If we go over to the Robinhood, it's going to be a beautiful day. I can already feel it. Up $800, almost at the $40,000 mark. I'm up $280 for these SPY call debit spreads that I opened yesterday, assuming that SPY would be above $408. Currently, these are going for $65. I ended up purchasing them whenever SPY was trading at $403 for $28 each. Okay, so my plan was to close this between 60 and 70 cents. So I'm out of this trade. I don't need anything more from it. I got what I wanted, and that's it. Okay, so I'm gonna close this trade for 61, just to be safe if the bid drops. And there it goes. Okay, so I closed half of it, or like 4 of these yesterday. Just closed these 8 today. I'm going to post this over in the trade alerts for the premium Discord members. Again, y'all can join the Discord using the link that should be pinned. Now it's pinned. But yeah, that was a nice little profit that I made, assuming that SPY would go up because of what Fed Chair Powell spoke about. And let's see. This one's under my desktop and my screenshots. So this is a closing options alert. Closing options alert. Premium 101. Freemium. Just took profits on the SPY 407, 408 call debit spread. Those were expiring today. Expiring 12/1, and then we sold them for $496. We had an 8, so we actually closed them for 62. We got a little bit better than expected, but and let me pull up the history. SPY call debit. So I closed 4 at 47. So closed 8 times 62 plus 4 times 47. Total of 684 credits. Close it. Divide that by 12. And you get 57 average close. Average close at 57. And again, I originally picked those up at 28 cents, so nice little 100% profit. Didn't spend a lot of money on it because I wasn't super confident in the trade. But picked them up at 28 each. So 57 minus 28, $29 each times 12. Nice little $348 profit. And I'll include a little Steph Curry in here. Anyway, been focused a lot on basketball recently, but enough about my life. Let's get to the trading. So another trade that I took on the Fed Chair Powell speech was TLT, assuming that it's going to either trade flat or go up. So I was bullish to neutral. I opened to put credit spread. And my assumption is that we're going to stay above $102. I have a mark set at 101.80 for the downside, just in case this trade starts to go against me, but should be doing pretty well this morning. Yeah, that one's up $530. These are going for 10 cents a piece. I originally picked them up for 32, and I think I'm just going to get out. I mean, it's trading at like 12 cents, so there's not that much more to make. I've opened 25 of these. I'm going to try to close them at 12. I'll probably have to close them at 13. But actually, you know what? I'm going to partial close. I'm going to close 15 of them instead of all 25. And I'll go with the ask price just because that's what Robinhood's going to want. They don't want to give me that extra profit, but yeah, I'll do this partial close. Still holding 10 of them, open them again at 32, so I can make another $320 from this trade. But yeah, it's been a month, bro. We'll talk about it. Closing options alert. Premium 101 premium. Just took profits on 15 of 25 TLT 107 108 strike prices. Put credit spread as a strategy. Those expire tomorrow, 12/2. And originally opened them at, let me get the closing price. 13 each is what I closed them. Let me show the screenshot of how many I'm still holding right now. I like to do that on mobile. It's a little bit sexier with the Robinhood platform on mobile. Where, oh where? There we are. How are y'all feeling this morning? I'm feeling pretty damn good myself. All right. It's been a good morning so far. Got to go to the gym, played some basketball, making some profit today. But how are y'all feeling? Let's see what else we got going on. So the account's at 39, so close to that 40 mark. Very happy with the growth that I've seen in the past couple of weeks. Probably going to be flat on the month just because I wasn't doing so hot. Like if you look at my spreadsheet, the beginning of the month was pretty freaking awful for me. If I look at my drive, and I'm going to update the drive, hopefully looking to create a options tracking app so I don't have to manually input all this crap. But for the month of November, we just closed the TLT 15 of them. I'm not going to insert the close on that yet. And I guess I missed the SPY call debit spread. Yeah, I didn't type that in. Yesterday, I opened it yesterday, 11:30. Closed it today, 12:01. So held it for overnight swing trade. Looking forward to the gym. That's good, Roddick. I've been hitting the gym every day. So I lift 4 days a week, and then I play basketball for an hour 3 days a week. As soon as Powell insinuated 50 basis point in real time, the whole market. Exactly. Yeah, like the market is so short thinking. But the thing is, like he talked about it in the last meeting where they're looking at the pace of interest rate hikes, the height, and the length that interest rates are going to be high. So there's more to the equation than just 50 or 75 basis points. Somebody who covered this covers this a lot better than I do is Maverick of Wall Street. Y'all should definitely go and check him out. He's kind of seems like a perma bear, but I do really love the way he presents things. Trying to get more like Mav, but we're not Mav out here. He is the Mav. Call debit spread. This is a bullish strategy expiring today, 12/1. I went long on the 407 strike price, went short on the 408. I opened just 12 of these. Opened them originally at, let's see, I think it was 20. Let me verify. 28 and then 57 is the numbers we're looking for. 28, 57. All right, so yeah, $348 profit seems right. But I wanted to talk about like the beginning of this month. I was really struggling with taking some pretty fat losses, and part of the reason for that was not having like an open mind. This is something that I've really started to work on in my trading, is being open-minded to any incoming data, right? So that can be inflation data, the Fed speaking, and you have to interpret it for what it is. Like, you can't have any bias in this market. If you have any sense of bias, then you are likely going to get freaking clapped on your trades. And I did end up getting clapped on a couple of major trades. This was one of them, SPY, call debit spread. I lost $1,200 on it. Let's see, on 12 or 11/9, I write notes on each trade that I make. So the 10-year Treasury yield was trading at 2-day lows, and then the 10-year Treasury yield spiked. I ended up holding on to the trade because I thought it would work out. And you can see that I would give like a grade to each of my trades, right? So if it's a higher grade, usually I would, be more biased to holding that trade. And I know whenever I hold trades into expiration, like I did with this one, I ended up taking my max loss. So I ended up losing $1,200 for that. But that is something that I'm hopefully, improving to try to avoid my biases the best that I can. Obviously, like, you're still going to have bias from here to there. Like me, not holding many stocks right now, selling out of most of my stocks. I do have a bias to the bear side for the long term, but trying to eliminate as much bias as I can again. Anyway, let's see. So this is the calendar. So you'll see which days I lost the most money on. I think that was the day that option expired. Lost $1,700. Really tough day. Lost $1,000 on the 4th. But last few weeks, again, I've been working on having, a more open mind to incoming data, trying to eliminate as much bias as I can. And the last few weeks have been pretty damn good. It's only 3 weeks of data, though, so not conclusive. But this is something that hopefully is going to improve my trading. You're in no bearish trades right now? Yeah, I think bearish trades are gonna be getting clapped. So this is something that I also want to talk about, is the potential of what's known as a gamma squeeze. So, as somebody who's long-term bearish on the stock market, now wanting to maybe start dollar cost averaging, I realize that potential and other bears may be starting to buy into stocks. And then, the short-term nature of the stock market, people buying out of the money weekly calls or even daily calls. The market makers, so the people that are selling these options to the buyers, have to hedge those positions. And the way that they hedge those positions, selling out of the money calls, is by buying shares. So basically you get like a positive feedback loop of, retail buying up the stock, and then you have market makers, buying up the stock and then buying out of the money calls, and then you have market makers also buying up the stock because they need to hedge. So this is what's known as gamma squeezing, and this will cause some of the most violent rallies that you will ever see. This happens pretty much on a monthly basis or like every 6 weeks. And then it usually ends up getting slapped in the face by Fed meetings. So we'll see what the next Fed meeting on the 13th and the 14th has in store. But yeah, this is a very common occurrence. Best ETF to trade right now, in your opinion? I am a big fan of trading SPY just because it's the overall market. You don't have to worry about, any big tech stocks getting murdered like you do with QQQ. So I'm the biggest fan of trading SPY. Let's see. Also long-term bearish. I'll be placing bearish swings in the next 2 to 3 weeks. Yeah, I'm bearish going into the Fed meeting just because I think that the summary of economic projections could be the kind of the bad part of the Fed meeting. But that's my opinion for right now. I think that if people see the terminal rate or where the Fed expects interest rates to be in the longer term, like I showed you earlier, that the markets aren't going to like that at all. All right. Anyway, let me pull back up. So I traded Snowflake for their earnings. They had a decent earnings to where they beat on the earnings per share. I think guidance was the caveat in why, they're not rocketing up today. They were down pretty harsh overnight. Like they were trading at 135. So I opened a call credit spread, assuming that it's going to stay below 155. So my analysis was that earnings per share is going to come in worse than expected. But the market rallying today, which was likely, is going to maybe, keep their stock pretty stable, which is kind of what's happening right now. But again, they did have a good earnings report, so I am looking to close this trade. I don't want to hold this call credit spread anymore. And it looks like the bid-ask spreads on Robinhood are stupid wide, as they always are. So I'm going to go over to the Aries account. I don't use this account. The main reason why I use it is to find the bid-ask spreads. I am planning to start making like $1,000 challenge or something like that. So if y'all want to see that, leave a like on this live stream and I'll try to make that happen. But basically, I'll be using the $1,000 to just buy long calls and long put options, because I know a lot of y'all are probably new to the stock market, new to options trading. And there's levels to it. You have level 1 and level 2 options trading where you can buy and sell options. And then you have level 3 options trading, which is where I'm at, to where you can do spread options. And I pretty much always trade spread options because you have, a defined risk, a defined reward, how much money you can make or lose. Whereas with buying calls or buying puts, like you have infinite potential reward, but then you do have a defined risk. Gold just went above $168. I do have a gold leaps that I'm holding too. So today is just a beautiful day to be a bull. Anyway, let's get out of this stupid Snowflake call credit spread. I think I sold the 155. I bought the 160 that's expiring December 2nd. And right now the ask is going for $100. I originally opened this for $120, so I'm easily a little $20 in profit, but it's better than Snowflake continuing to go up past that 160 mark and taking my max loss, which would be like $380. I'd rather make $20 and lose $380. But is the Indu high in my opinion? I'm not sure what Indu is. If you could explain that, that'd be great. Looks like that trade's not filling us. Damn it. The ask just went to 110. All right, I'll close it at 115. $5 in profit, but again, better than taking the 300 loss. The Dow Industrial. So the Dow Industrial, let's talk about that after I close this spread. All right. Closing options alert. Premium 101. Premium. Just took profits on the, can't spell. Snow 150, 155, 160 call credit spread. Expiring tomorrow 12/2 at 114 each. We got a little bit better. Originally opened at 120 each. Little $6 profit. There we go. Just a little profit. I'll take it though. Again, better than losing $300-400. So I'll take what I can get in this market, especially with the volatile swings that we see. So the TLT put credit spread doing still well. They're going for 11 cents at the ask, but you're asking about the Dow Industrial Average. So the one that I like to use is the DIA whenever I'm looking at the Dow. And let's see. So the Dow is actually down 0.1%, where SPY is up 0.4, and QQQ is QQQ is up 0.7%. So what you're seeing is you're seeing tech lead the way. Okay, so tech is very heavily reliant on interest rates being lower. So why tech is going up right now more than the Dow is actually down is because tech is based on, their valuations are based on growth. Okay, so whenever interest rates are going higher and higher and higher, or higher quicker, that is going to reduce their power to grow their company because it becomes more expensive to borrow money. Whereas the companies that are in the Dow Industrial are, these well-established companies like Coca-Cola. What are some other stocks in the Dow? I can't really name them off the top of my head, but they're more kind of established companies that have been around for a very long time, and they are more, what is the word? Basically, they're more staples based. Like Walmart would be a good example of a stock in the Dow. Like, people aren't going to stop shopping at Walmart because interest rates are going higher. Like, people need to shop at Walmart. People need to buy Coca-Cola, right? So those companies are going to, looks like my light just shut off over here, so hopefully the stream looks okay. But basically, the stable companies will do better during a recession and higher interest rates than tech companies. So I do think that buying into Dow type stocks, or established companies such as Coca-Cola, Walmart, is a good thing to do, because there is inevitably going to be a recession. And we've seen the Fed coming out and saying that they want this soft landing, but the soft landing is literally impossible. The evolution, this is something that I got from Maverick of Wall Street, but the evolution of inflation is going from inflation to stagflation, where you have both inflation and a slowing economy. So you have inflation, stagflation, and then that always, as Maverick would say, ends in a recession, right? That is the natural progression of going from inflation to, or going from high inflation to regular inflation. And if the Fed does decide that, the economy is taking too much pain, we're going to get what we had in the 1970s. So if you look at the 1970s inflation rate, let's see. Hopefully I can find the chart for it. Historical inflation graph. If you look at the rates from the 1970s, though, it was horrible. Obviously, I wasn't living through that time. Maybe if I grow the mustache back, it'll look like I lived through that time. But let's see. So we zoom into the 1970s, and basically what kept happening, I'll pull up the Fed funds rate too, is any time that the Fed sensed any sort of weakness in the economy, they would cut the rate. Like, basically the Fed just kept chickening out. So you'll see this is a Fed funds rate. So it started during the 1970s because of the oil embargo. So it's really funny how energy is basically what led inflation. And that's kind of what's happening right now too. History is very repetitive and we don't learn from our mistakes. But basically, anytime that the inflation, or anytime that the economy would start to kind of weaken, they would cut the interest rates. And then you had Paul. I don't know why this is like not showing me the range that I want it to. There we go. This looks better. So in 1974, we started to have a recession. So the Fed ended up cutting rates from 13% down to 5%. And then if we look at inflation from 1975 to 1980, when they got the rate back up to where it was, inflation was, let's see, 12%. It did come down in the last couple of years, but then it went right back up to 13%, right? And then you had Paul Volcker, who took the Fed chair in, I think, 1979. He ended up jacking the interest rates above the inflation rate at 17.6%, and then he immediately cut the rates in, I think, 1981, or I guess July of 1980. So he chickened out too. But then he raised the interest rates back higher, and he kept those interest rates higher for longer in order to stomp inflation, basically. So that's when you saw inflation finally curb after they kept the interest rates higher for longer, and the inflation, or the Fed's funds rate above the inflation rate. We went from 12% inflation down to 4% inflation as of 1982. Kept inflation below 4%, and then that was the history. That was inflation for you. So if the Fed does let off the gas and start to cut rates because they think that the economy is weakening, that is just going to lead to higher inflation. And you don't want higher inflation, because then you end up like countries like Argentina, or you end up like, I can't really think of it off the top of my head, but like these countries are going through a lot of chaos right now because of the high inflation, because, inflation really hurts the people that are on the low end of the income spectrum the worst. Those are the people that can't afford it. And, unfortunately, they start to riot. They start to stand up against the government because, like, the government is basically failing them, right? That's it for my inflation rant. But anyway, let's go back to trading. TLT, those put credit spreads are going for 10 cents each, 12 cents. I'm going to close them at 11. I don't really need the extra $100. So I will try to close 10 at 11. And I'll be out of that trade. Hopefully we can make a new trade today. My assumption is that SPY is either going to be flat or up today, so I'm probably going to open a put credit spread after all this. If the rates help tech, why has Apple gone higher, in my opinion? Let's talk about Apple. This is going to be really fun rant. Why has Apple not gone higher? So, okay. We'll talk about that. Let me close this. Closing options, alert, premium. There's a special reason for that. Just took profits on the TLT 103, 102. Put credit spread expiring 12/2 at 11 each. So let's see. TLT, put credit. All right, so I closed 15 at 13, and then 10 at 11. So that's 10 times 11 plus 15 times 13. So $305 divided by 25, 305 over 25. Average close at 12.2. I'll call it 12. Average close at 0.12. Opened originally for 37. So 37 minus 12, 25 times 25. Nice little $625 profit. So that's a pretty damn good profit. But going back to what you were talking about with Apple, why has Apple not gone higher? So what are we seeing between Apple, Twitter, and Elon Musk right now? That's the reason why Apple isn't seeing as much love as the rest of the stock market, because Apple is coming under a lot of scrutiny, rightfully so, from the Department of Justice. So what Apple has done over the last 10 years, really, since Steve Jobs left and Tim Cook took office, is they've focused on creating services revenue. Okay, so they get a lot of their money, a lot more of their money is coming from services, because they charge a 30%, basically a tax for developers that want to put their app on the App Store. So the Department of Justice is saying that, all right, this is basically creating a monopoly. That's not okay. And then you have, the beef between Apple and Twitter and Elon Musk that we talked about yesterday. And, censoring free speech is basically what they're doing whenever they decide to take Twitter off. It's a direct attack against Elon Musk. And Elon Musk thinks that it's an attack on free speech. And I, agree with this. I am a very big proponent of free speech. Obviously, like, hate and, like, degrading speech, not for that. But, like, people should be able to say whatever they want, as long as it's under the law of the country that they're abiding by. Like, if it hurts people's feelings, then that's life. Like, you got to be able to deal with it. But anyway, enough about free speech. Basically, the Department of Justice is coming out with some possible regulation for Apple with their App Store charging 30%. So that might start to cause their revenue and their earnings to come down. So that's why you're seeing Apple, not going up as much as the rest of the market, or at least as much as the rest of the tech market. Tesla is up 0.3%, so it's basically along the lines of what the Qs is doing, up 0.15. Tesla obviously has a higher beta or volatility compared to QQQ. So looks like SPY is actually pulling back a little bit down to break even. So I think we might have a decent trade idea with the put credit spread. But I want to come up with some decent strike prices. So what I like to do for strike prices is use some price levels. So we don't have a lot of candles of significance, is what I like to call them, where there's a much larger candle than the rest. This will be a candle of significance. And we have a market set at 402.04. But 402.04 is a long way from where we're trading right now at 407.50. So we're going to have to go by maybe this level that it stopped at 403. Let's see. The close of this candle was 403.16. We'll call it 403.15 just because I love round numbers. Buying SQs. I don't know if I would want to be bearish in this market with the inflation coming in better than expected. And then Fed Chair Powell speaks yesterday. But you could definitely make some profit if SPY keeps coming down. Right now it does seem to be starting a downtrend, interesting enough. But I have a 405.75 mark and then a 403. So we're getting pretty close to that 405.75 mark already. But I do think that we're going to hold it unless there's any, crazy news. And looks like we're selling off pretty quickly with no big news that I know of. But let me check investing.com, see if there's anything that's not hitting Thinkorswim. Let's see. U.S. stocks mixed on easing inflation after Fed signals smaller interest rate hikes. That should be bullish, but let's see what else we got. That was 13 minutes ago. That's about when we started the drop. Interesting. So not really much big news coming out. Let's see most popular news. Oil rises on chance of OPEC output cut. Easing China COVID curbs. That's an interesting read. China COVID curbs. Let's see. I want to read about that. Let's search for China in here. Easing COVID curbs in China raise the likelihood of higher demand for the world's top crude importer. The apparent shift in China's zero COVID policy strategy raises optimism over recovery in oil demand. The signals coming from China are also very positive. But what did China really announce that would give people that sentiment is the question. All it's saying is that the signals, quote unquote, are looking positive, but I haven't seen anything from a China official. Maybe I'm missing something there. I don't know. But I think we hold 405 maybe. I wouldn't put a lot of money on it just because we're trading so close, but I think we hold 403 or 402. So I'm going to open a put credit spread. I'll make this over in the premium Discord. Let's see. And again, my assumption is we're going to stay above 403 or 402. And right now we are headed down pretty quickly, so. We're down 0.3% today. I mean, all the economic data seem pretty good. These spreads aren't paying the best. So I'm going to have to increase my risk by going with higher strike prices, it looks like. Even these spreads really aren't paying that well, honestly. Assuming that it's going to stay above 405. That's kind of surprising. Let's see. I'm going to set an alert for if we go below 405.75. And that'll be my exit target for the downside. Hopefully we do remain bullish. Otherwise this trade is going to get gonna end up in a loss. But I mean, we're only about $1 away from it. So let's try to get it open. 23, 24. And for this trade, I'm pretty confident that we're going to be up today. I'm less confident because we're trading so close to the strike price. So when I'm more confident, I like to base my trades on how much money I think the trade is worth, and I think this trade is probably worth around $400, just based on my analysis. Obviously, like if you have more money to work with, then you could make the trade more valuable. But I think it's worth around 400. So I'm gonna try to open as many as it takes to get $400, and it looks like, let's see. Oh wow, yeah, these are already going for 30. Okay. All right, so I open that put credit spread. I'm going to post it over on the premium Discord. And it looks like we might hit that 405.75 mark pretty damn quick. I might have to exit that trade right away. Hopefully not, but yep, it looks like we tagged it. So now we have to wait for a confirmation that it's going to keep falling. So usually I like to say if the half point between the open and close of this candle goes below the 405.75 mark, that's kind of a confirmation of it selling off. But let's see, Robinhood or Discord is where I wanted to go. What's your opinion on stock like McDonald's? McDonald's, yeah, that's another one, kind of like Coca-Cola, Walmart. People are going to go to McDonald's even if we're in a recession. All right, so new trade alert, or new options alert, I should say. New options alert, premium. So again, this is a put credit spread. I'm assuming that the stock market is either going to be bullish or neutral today. Let me make sure I have the right expiration date set. Yeah, I have it set for today. So this is a day trade that I'll be making. Day trade. Let's see. And I got them for a decent credit. So hopefully that helps us out, but looks like we are almost confirming below 405.75, so I might be exiting that trade almost as soon as I entered it. Let's see. Definitely wouldn't be good if we went down to 403. But seems like we're catching a little bit of a bid or bouncing off that 405.75 mark, possibly. We'll see. We'll see if that holds or if it folds. Options trading is a lot like poker. You got to know when to hold, when to fold, and if this goes below 405.75, it's time for me to fold. A big iPhone manufacturing city is having issues in China. So yeah, there's the one that was in Taiwan. People were trying to escape from the zero COVID lockdowns. So yeah, because of the zero COVID lockdowns and everything that's going on in China, there is a lot of risk in that too. So you have that. You have legislation action being taken against the 30% that they're taking. Thank you, TC. Appreciate you. So you have the legislation possibly from the DOJ. Well, I guess DOJ doesn't do the legislation, but the DOJ acting against the 30% tax, basically, that the App Store takes. Definitely not a good sign for Apple. And with the rest of the market coming down, I actually might hedge with an Apple position. Let's see. Keep up the right work. Thank you. Yeah, I mean, given the tensions with everything going on right now, I think there's a decent chance that Apple keeps coming down. The apple might fall from its tree, what I like to say. Decent chance we go below maybe 146. It's already trading at 147, so there's not much more room that it needs to fall for that. I would imagine that those are going to be pretty expensive, but I'm looking probably at a put debit spread, assuming that it's going to be bearish. Again, based on all the tensions with Elon Musk, the government, China, doesn't seem to be a good place to be for Apple. But let me see if those put debit spreads are decently valued. They're okay. And this will be kind of a hedge against my SPY put credit spread. So I'm assuming Apple will come down, but SPY might go up. So I get a little bit of a balanced, trying to, if Apple goes down, then I would make money on that, but I would probably lose money from SPY, so it would kind of balance out, basically, is what I'm trying to get at. But these are actually going for a decent value. I'm going to set my expiration date for the 2nd. Again, this is a put debit spread, and I'm assuming that it's going to come below, probably around that 146 mark where it kind of stalled out. But we'll see if we can get them at a decent value first. That's the main thing that I want. And this trade I'm not super confident in, just because it is a hedge, and I am assuming that SPY will go up, which means that Apple would go up too. So this one I'd probably only be willing to risk like maybe $300. Alright, so I'm going to open that. Yeah, that's about right, about what I want. Alright, so I'm going to post that one in the trade alerts, and then I'll let y'all know whenever I close. Okay, so it's a put debit spread. Expiring 11 or 12/2. Oh, I can't spell. All right. Let's see, 307 over 7. Opened them at 44. Wait a minute, that's more than what I put in for my bid, but okay. Apple coming under a lot of pressure from China's zero COVID. DOJ investigating their 30% tax from the App Store, and markets are selling off a bit from this morning's high, using this as a hedge for my SPY put credit spread. Oh geez, what's going on? It's supposed to be a good day. Yeah, I thought so too. Kind of interesting that SPY is coming down to 405 now, so I might have to get out of that that put credit spread that I had. We'll see. So we had a pretty solid confirmation that it's below. Let's see. I think I'll probably end up taking a loss on it, but we have that Apple position that'll help us hopefully gain it if SPY keeps coming down. I want to wait just a couple more seconds. 406.53. Okay. Trying to see how I would do like the reverse average of this. Maybe I could just use the average between 403 and 405.75. Let's see. 403.15 plus 405.75 multiply that by a half, and you get 404.45. 404, that's way down here. I don't think we reached that mark, but I mean, if the markets keep selling off, that would probably start to worry me for this put credit spread. But it looks like we're coming back to that 405.75 mark, so hopefully we cross above it and confirm some more upside. But let's see what else we got. U.S. Senate Majority Leader Chuck Schumer says the Senate cannot leave, so they can't take their little recess until it completes the legislation on the rail strike. That's interesting. Chuck Schumer. Usually they just take their recess whenever they like, and they don't really care, but that's interesting that Schumer is actually trying to advocate for the American people. Good on him. A decent politician, I guess. It's hard to come by. Why does Robinhood not like filling orders? Driving me crazy. Are other brokers better with this? E-Trade has some of the best fills from what I've seen in my Discord. The people that get the best fills is always E-Trade. Robinhood has the worst fills, although I still use them. But let's see. Those put credit spreads that I opened are down 90 right now. Say there's a decent chance of holding the 405.75 mark, but it looks like we're getting rejected right now, so I think I might head out of that trade. Let's see, 70 times 15. I'm risking a pretty decent amount, 1,050. So I don't want to lose that. So yeah, I think we're going to get rejected by that 405.75 mark, it seems like so far. So I'm going to close these trades. So I'll show you all what I opened. It was a 405, 404 put credit spread, so I'm assuming that SPY will be above 405. But currently we're below that 405.75 mark, which was my exit target for the downside. So seemingly we're going to probably come below that 405.45 mark, and that would almost result in max loss. So I'm going to get out while I'm not too deep in this. I opened 15 of these spreads. We'll try to close them at 40 cents a piece. Hopefully we get filled. All right. There we are. 15 of them at 585, so we got a better fill than we had expected, which is always nice. But let me get out of this, post this in the premium chats. And this was a loss, unfortunately, but you win some, you lose some. Closing options alert, premium 101. Just cut losses on the SPY 405, 404 put credit spread expiring today, 12/1 at how much did we get them for? 585 over 15, 39 each. It looks like we're headed down to that 404.45 mark, so glad I'm out. SPY put credit. So let me see what I originally opened them at. Originally opened them at 30 credit each. So 9 times 15, $135 loss. So sometimes you win them, sometimes you lose them. You just got to deal with your losses a little bit better and not ride them into your max loss like like I was doing in the beginning of this month. But that's probably all the trades that I'll make today. I still got that Apple spread that I had opened, currently profitable. And I will catch y'all tomorrow at the same time. Hopefully y'all are having a good morning, and hopefully y'all have a great day. All right. See y'all tomorrow, everybody.